Yo, what's up, everybody? It's Monday, April 7th. I was supposed to head out to Utah today, but my flight, it wasn't canceled, but it was delayed by so many hours. I got a notification early this morning. It got delayed, that I was going to miss my connecting flight, and then I just said, fuck it. I'll go another time. I wanted to go check out Canyonlands and Arches, two national parks that I haven't been to, and they're kind of like on my bucket list. I wanted to go, so another time. So today the market attempted to rebound. I think we got a positive close in the NASDAQ. Dow was down. We got a positive close in the S&P. A lot of crazy language. I always say, like, I've made many videos where I talk about language, how language is important. And what I mean by that is just how we phrase things. All right, the way we talk, that communicates with our brain, that can trigger emotion, the way we phrase things. A lot of times as emotional beings that we are, and I don't care how much self-control you have, how much discipline you have, we're human, we're emotional beings. So, there can be a tendency to emote or to communicate, even to oneself, in a kind of a very hyperbolic fashion, just exaggerate things, and we certainly see that in the media. Actually, in the media, I think it's done by design, because that's what catches eyeballs. That's what gets people interested. They want to see, the more emotional is the headline or salacious or anything like that. They want to read it. They want to watch it. So, it's kind of part of our society, actually. Believe me, I was guilty of this in the past when I was a trader starting out. I got killed. The market's tanking. It's a moonshot. I'm getting crushed. All these very exaggerated adjectives. They're no good, man. And then today, or actually, I guess it was over the weekend, Bill Ackman, the hedge fund guy, he said that this what Trump's trying to do is going to end up being an economic nuclear winter. That's about as bad as you can get. Nuclear winter is what happens after a nuclear war, where the globe is just blanketed by the residual, the dust and the radioactivity and the smoke and the fires that go up into the atmosphere, and they black out the sun, and it becomes like a perpetual winter where basically everything dies. By the way, if I look like I'm scratching all over the place, I was just out in my yard planting a little tree, and I got freaking attacked by mosquitoes. It's mosquito season down here in Florida. I live there's a lot of water around where I live, so it's a perfect breeding ground. So yeah, when I saw that, I make note of that. I've been in this game a long time, and like I said, I was guilty of that same kind of communication, talking to myself, phraseology early on, and even well into my career. I stopped recently. By recently, I'm talking like maybe 5-10 years ago, but I don't do that anymore, and I tell people not to do that. But by the same token, when I see other people doing that, I pay attention to that, because that is another indication of high emotion. And when people are emotional, this, I don't have to tell you this, when people are emotional, they don't make the best decisions, okay? And it also is a kind of an indication of their mental state, like if they're really emotional, they're either really scared of something, okay, which is probably maybe not warranted, or they're really, really excited by something. It's kind of like a bipolar thing, like they're either here or they're way down here. As a matter of fact, when I used to teach my Forex courses, I used to show people how I would use volume. Like most people use volume differently than I do. I look at volume as a measurement or an indication of urgency. Okay, the urgency to get out or the urgency to get in. Like FOMO, fear of missing out, or like if it's going against you, I got to get out, I got to get out. Maybe it's margin call, maybe it's a forced liquidation, or just like people panicking. So I do the same thing with the language. When I see a guy like Ackman, who, ordinarily, like, he's a pretty stable guy. He seems more on the reserved side, I would say. Everything, like the way he talks, if you see him on some of these business shows, which I don't watch, but I mean, if you listen to him, he's very measured. A guy went to Harvard, he's very educated, he's very measured, he doesn't get too hot, he doesn't get too cold. He's like one of these very polished dudes. So when you hear him say that this is going to be a nuclear winter, I mean, folks, as bad as it looks with the market, it's nothing compared to what an actual nuclear winter. I mean, the last thing we'd be thinking about in an actual nuclear winter is the market. Now, I only bring that up to kind of show you how the emotion is very, very high. Not that I need to point that out. I'm sure maybe some of you are feeling the same way. But you got to get a grip, man. I mean, I sent out an email today saying to people, look, pull back a little bit. Step away from it. Too much stimuli, like step away from it. Let it calm down. I mean, it was going down, it was going up, it was going down, it was going up, it was going down, and it ended up, down up. Step away from it a little bit. Get some space, man. Sometimes you just need some space to clear your head out and just take your face. You're looking at the screen like that, like fucking frozen, is not doing you any good. Which brings me back to what I've been talking about. See, for me personally, there's not a whole lot I could tell you in these last few days because the core fundamental things that I look at, there's been no change. There's been no change in the fiscal flows. There's been no change in the customs taxes that I can see of any real consequence. So, I got to go by my indicators. And I've been in this game long enough, as I just explained to you, that emotion is a big, big part of the short-term directional bias of the market, but it's something that we could take advantage of. Now, if I see something start to develop, remember the other day I said, look, it was like going to the doctor's office and the doctor says, something, maybe I see something on the scan or in your blood test, but you know what, right now, it's not something that we should really be concerned about. Let's monitor it. Same thing. I do, to be honest with you, I do see a couple of things, but they're not at a level right now where I could definitively say, that's developing into something and we got to switch tactics now. We got to change strategy. They might, but right now they're not. If you want to know anything about that, you got to go sign up for a 30-day free trial. It's free for 30 days. Go to my website, pitbulleconomics.com. So markets go down. The thing is, for me, I love this environment. I put a lot of money to it. Well, now I don't even have any really investable cash on hand because I was very aggressive over the last few sessions. Unfortunately, anyway, we were kind of like flat to up today. I love it when it's like this. I was just talking to my son today who just got involved really with stock market investing. He's pretty young. And I was, again, saying to me, like, when I observe people's behavior, I was telling him, like, if you had a consumer item, something you really like, whatever, a car, a piece of electronics, a telephone, pair of shoes, I don't know, whatever, a house, property, And all of a sudden it was on a massive, and you wanted this really bad, but it was expensive. And all of a sudden it's on a massive discount, the same item. You go in there and you buy it. But I mean, when it comes to stocks, when it comes to investing, people do the exact opposite thing. I had people today saying, should I sell out? Should I sell out? Look, even if we go into a recession, even if it's a prolonged recession, I don't plan on dying next week. At least I hope not. Try to stay in shape, try to stay healthy. I'm just going to keep accumulating. Here's the thing. I wish I would have done this when I was young. I don't want to say I was wasting time. It was a cool occupation. I was a floor trader. I was a member of 4 different exchanges, futures trader. It was fun. It was wild. I'm happy that I got to experience that. It doesn't exist anymore. It was just like something very unique and very special. And it was a lot of fun. I had a great time. Did I make a lot of money? No. There were times when I made big money. And there were times when I got my ass handed to me. But I wish I would have been in this mindset way back then, to just accumulate assets. The game here in the United States, that's what it's set up for. I don't know, maybe it's going to change now with all this, what Trump is doing. But the game was set up for so long, they told it to you. It's an ownership society. It's not about working at a job. It's about ownership. That could mean home ownership, assets, a business, stocks, property, ownership. They gave you the formula right there. And the beauty is, like, banks lend. There's people out there who want to invest. I lived in Europe for 10 years. You didn't have this opportunity. And I lived in Switzerland, which was very, progressive, at least in a finance capacity. The banks, blah, 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 that kind of stuff. People there with money, they would invest. But still, it's Europe. It was very tight, very closed. People didn't want to take risk. I mean, here it's a beautiful thing, man. It's a beautiful thing. If you're young and you're starting out, the game is so freaking easy. It really is. And the stock market's not going away. Believe me, it's not going away. It's the best wealth accumulating mechanism that there is, aside from, starting a business. But, so anyway, we'll see what happens. If those other things that I alluded to, if they start to develop, then it's a different scenario. But I know what to do under that scenario. By the way, some people were asking me about the bond trade today, which the bonds took some profit taking in the 10-year Treasury. The yield jumped back up to 418, 419, maybe even 420. Last night we were at 387. It's okay. Look, there's still a lot of inflation fear out there. You had Jamie Dimon today, the CEO of JP Morgan Chase, saying, yeah, we're going to have an inflationary recession. He's never been right about anything. I like the guy. I think he runs a great company. But I've never seen him really to be right. He might be right this time. But look, the other thing I want to briefly say is that, and I've said this before, all of these people, these economists who are drawing analogies with like the 1920s, the Smoot-Hawley tariffs, all that stuff, that was a different system back then. The world was on a gold standard. It was an international gold standard, completely different. We didn't have floating exchange rates. Bill Mitchell, maybe some of you know Bill Mitchell. He's an MMT academic. He's over there in Australia. He has a blog. Good guy, man. His posts are very thoughtful, usually very long. Today he talked about something. He was a little bit of a skeptic on it, but he highlighted it was an article or a paper, which I think he said might be the foundation The guy who did it is the chairman of the Council of Economic Advisors to the president. I forget this guy's name, but he did a paper on tariffs, and basically his proposition or his theory is that the exchange rate will adjust, and ostensibly under a floating exchange rate regime like we have in the world today, pretty much, it's particularly in all the industrialized countries. Maybe you would exclude a little bit China, but still, you know, it's kind of a dirty float. And China has a reason. If they want to maintain export volumes, you know, they could let their currency slip. So what he's saying, what this guy was saying, and again, Bill Mitchell was a little bit of a skeptic on this, but I'll add something to that in a second. Anyway, this guy who's the chairman of the Economic Advisors, he said that the price impact of the tariffs will be offset by the adjustment in the exchange rate. And I could see that. I could see the dollar going up. That's the way it's supposed to work. Now, it might not be a complete offset, but by the same token, it doesn't mean that if you put a 25% tariff, if Trump puts a 25% tariff, then automatically the price goes up 25%. There's going to be some adjustment in the exchange rate. Bill said he wasn't so sold on that in his post. Okay, but let me tell you that in 2018 and 2019, the last time Trump put his tariffs on, guess what happened? The dollar went up during that period. That's why we had very little inflation during that period. Then we got into 2020, which was the pandemic, and we had a massive, unprecedented fiscal expansion. So yeah, the dollar went down with that. But if you just take that period of 2018, 2019 with the tariffs, dollar went up. And the system worked the way it was supposed to work. So I'm putting on a big long dollar position. What does that mean? I'm shorting these other currencies, the euro, the yen, the Chinese yuan. I'm doing that. This could be a generational trade, man. This is not something I'm putting it on and next week I'm taking it off. No, you know, if it doesn't work, I'm taking it off. If it works, I'm just going to keep adding and adding and adding, because this is like fundamentally changing a system that has been in place for what? The last 40, 50 years? 40 years at least? So massive potential here. The risk reward on that, I think, is like freaking unbelievable. Anyway, that's it for today, folks. Please like and subscribe. I noticed that the likes and the subscribes were slowing down a little bit. Please like and subscribe if you've done that. Thank you very much. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.